Most people will never know this, but the money in your bank account is no longer just yours. Every payment you make, every purchase you complete, every cent you transfer could soon be tracked, monitored, and controlled. Central Bank Digital Currencies, or CBDCs, are not just a new payment option, they are the framework for total financial surveillance. Your wallet, once a symbol of freedom, is on the verge of becoming obsolete. This is still happening today, and the systems being built are faster, deeper, and more comprehensive than most imagine. Most people will never know this because the media paints a friendly picture. Digital money is faster, safer, easier, they say. No more carrying cash. No more waiting in line. Convenience is the bait. What they don't tell you is that every major central bank, from the Federal Reserve in the United States to the People's Bank of China, is quietly piloting digital currencies with built-in surveillance mechanisms. Every policy paper, every technical framework, every trial app is a step toward a world where cash is optional for you but mandatory for authorities to control. Here's what they don't want you to see once fully deployed. Central banks could monitor, restrict, or even block transactions in real time. History shows a clear pattern. In 1983, the first electronic banking systems allowed money to move between accounts almost instantly. By the 1990s, online banking was becoming common, and by 2008, it was standard. Most people will never know this, but each technological step normalized digital dependency. Cryptocurrencies like Bitcoin and Ethereum emerged as a decentralized alternative. Governments watched closely. By 2016, China began quietly testing its digital yuan, starting in Shenzhen and a few other cities. Citizens made daily purchases digitally, all recorded by the government. Most people will never know this, but these experiments were a rehearsal for global implementation. This is still happening today, and the lessons learned in China, Sweden, and the Bahamas are shaping financial control strategies worldwide. Sweden's e-krona pilot is a clear example. Cash use in Sweden has plummeted, replaced by digital payments for convenience and efficiency. Banks and merchants encourage digital transactions. Taxis and government benefits are integrated digitally. Most people will never know this, but every e-krona transaction can be monitored. Every purchase can be traced. This is still happening today, and it provides a blueprint for what the global rollout of CBDCs will look like. The Bahamas Sand Dollar, launched in 2020, demonstrates another example. A nationwide digital currency allowed the government to monitor financial activity in real time. Most people will never know this, but small nations are testing systems before global powers scale them up. This is still happening today, and the technology exists for complete oversight. In the United States, the signals are unmistakable. The Fed has been researching a digital dollar for years. FedNow, the real-time payment system, allows instantaneous money transfers across accounts. State-level pilots for digital wallets, programmable money, and digital IDs are quietly underway. Most people will never know this, but the legal and technological infrastructure is being built. Every law, every policy, every technical protocol brings citizens closer to a system where every dollar spent is visible and potentially controllable. This is still happening today, and 2026 may mark the start of the critical transition period. The timeline is chilling. By January 2026, the first nationwide trials of government-backed digital wallets are likely to begin. Participation will be framed as modernization and security. Convenience will be the selling point. By March 2026, legislation may quietly pass to allow banks to reduce cash availability, citing fraud prevention and efficiency. June 2026 could see incentives rolled out for digital payments, from tax rebates to utility discounts. September 2026 may introduce pilot programs linking spending patterns to behavioral scores, environmental metrics, or loyalty programs. By late 2026, international forums like the G20 and IMF could align regulations globally. Most people will never know this, but each move is deliberate, synchronized, and designed to phase out physical currency. This is still happening today, and the next 5 years will be decisive. By 2027, banks may start restricting cash withdrawals, citing efficiency and security. Digital wallets will likely be linked with government IDs, tax, databases, and welfare systems. Programmable money could enforce spending rules, certain purchases blocked, others in. Most people will never know this, but every transaction could be under scrutiny, and privacy may become a memory. This is still happening today, and those who ignore it will be unprepared when full control is enacted. By 2028, the integration of digital wallets, AI-driven transaction monitoring, and global coordination will create a near-complete surveillance network. Spending habits may be scored, rewarded, or restricted according to government or corporate priorities. International cooperation may create standardized rules, linking central bank digital currencies worldwide. Most people will never know this, but the infrastructure for total oversight will exist. This is still happening today, and citizens may have very few options to opt out. By 2029, the system may become nearly unavoidable. Digital wallets will dominate. Large transactions, retail purchases, and even small payments may require fully traceable digital currency. Black markets may shrink. Street-level cash transactions could disappear, and authorities may enforce economic behavior through programmable money. Most people will never know this, but control over spending and wealth will shift decisively toward institutions, leaving individuals with limited autonomy. This is still happening today, and those who value financial freedom will have to act before the final stages arrive. By 2030, physical cash could become nearly extinct in developed nations. Every transaction, from coffee to mortgages, could be digital and traceable. Most people will never know this, but central banks, governments, and corporations with access to data will gain unprecedented influence over daily life. The winners are clear: institutions controlling the digital money supply. The losers, ordinary citizens, small businesses, and anyone relying on privacy or financial independence. This is still happening today, and the choices made in the next few years will determine how much control we retain over our own money. The consequences are profound. Financial autonomy is under threat. Behavioral controls can be implemented with a few lines of code. Spending choices, freedom to save, and even political dissent could be influenced by programmable money. Most people will never know this, but once the infrastructure is complete, opting out will be nearly impossible. This is still happening today, and preparation is the only defense. Understanding the systems, monitoring policy developments, and staying informed will determine who retains control over wealth and freedom. Central bank digital currencies are not just an evolution. They are a revolution in oversight. Most people will never know this, but they are quietly building a global, programmable financial system. Every transaction will be a data point, every purchase a potential control lever, every dollar a monitored asset. This is still happening today, and ignoring it will ensure you become fully subject to digital financial control before realizing it. Knowledge is the first and only defense. If this video woke you up, drop a like and subscribe. New forbidden truth every single day. Turn on notifications to. Next one might save your wealth. Comment the one thing you're doing right now to prepare. I read every single one.